And so you're talking about like Wall Street adoption. Wall Street likes to make money, right, Jim? Like I've heard that about them. And there's
Yes.
money in these DeFi capital assets. Talk to us about that. Do you think DeFi tokens are actually an easier pitch than an asset like Bitcoin?
Yeah, they are an easier pitch because they do understand them. And a quick word about those, just so you know where I'm at. I think that Bitcoin and DeFi are two sides of the same coin. The best thing that's happened to Bitcoin is DeFi. And the thing that has helped DeFi go is that Bitcoin existed in the first place. They need each other. That's the way I look at it. That's why I have no patience for the maximalist argument. That the day that everything but Bitcoin goes to zero, I'll buy your Bitcoins off you for $10 a piece, because that's about what they'll be worth at that point. You want to know what's going to get Bitcoin to $500,000, ETH at 10,000 plus. I mean, those two things are, I mean, I believe the flippening will happen too, but those two things are not unrelated to each other. I don't understand this argument that we have to war with the other side of the crypto universe. You're warring with the TradFi guys is really what you're warring with. You're warring with the regulators. But yeah, to your question, they understand the tokens because it's so similar to what they've seen in this space. And ultimately, I'm in the Jeff Dorman camp, right? That I could see a day in the future where a company's capital structure is not just stocks and bonds, but it's a whole variation of tokens as well, too. Tokens that represent assets or future liabilities or intellectual property or anything along the way that they could fee-generated income and anything else. $1 trillion a year of M&A is done on Wall Street. Why is $1 trillion of M&A done on Wall Street? Because the traditional model of stocks and bonds is inefficient. And companies and M&A mergers and VC firms will come in and they'll buy these companies because they think that they can unlock value because of the inefficiencies of the current system. And again, the problem is that the people that tend to buy these companies and go private, you and I can't invest in these private equity firms because we're not accredited investors and we don't know who they are, and we don't have the high dollar amount minimums that we can invest in as well too. But you break that down into a token world, and then all of a sudden, anybody can start looking at that value as well too. And I'm going to channel my inner Jeff Dorman again. The token world can open up whole new possibilities to a lot of other companies. Metcalfe's law with network effects. It works with Tesla. It works with Apple. Why? Because who owns an Apple product or who owns a Tesla? Probably people that also own those stocks as well too. Now go look at Dollar Tree or go look at McDonald's. How many of their customers actually own their stocks? Very, very few. But if you introduced a token that represented some kind of value that was cheap and maybe gave you a break on a meal at McDonald's, and you bought this token and you got some 10% or 15% off on a meal, I'm making this up as I go along, and you participated in the success of McDonald's and its price went up, the token price went up, you've become an advocate for those firms. Just like the great thing that Tesla has is, what does somebody who pays $150,000 for a Tesla probably also have? The stock. And that they run around and tell everybody how great the company is because they benefit if the stock goes up. Boy, would McDonald's love to have that relationship too. They can't with the current equity system. It's shut out too many of those people that typically eat at McDonald's, but a token world could open it up to them. So there's a lot that can be done with tokens that we're just scratching the surface on. And Wall Street is starting to pick up on this. If you talk to a lot of Wall Streeters, about investing in DeFi, you'll hear a phrase, picks and shovels, that they all want to invest in the picks and shovels, right? They all want to be in the chart, or they want to be in Chainlink, or they want to be in some other thing that, Ren, or some other thing that is working on interoperability or something along those lines. And that's great. And that's necessary. But why not move beyond that a little bit? And they're not quite ready to go there. But if we could get a definition of what a token is and open up all of the use cases for tokens beyond what we've got now, you could definitely see a lot of more forward-thinking Wall Streeters start looking at these tremendous opportunities that tokens can bring to the capital structure of a firm, or to a network effect to a company like a McDonald's or a Dollar Tree that can't get a network effect between its customers and its shareholders right now. So a lot that can be done in this space, and we're just beginning with it.